Hello, Culture Matters podcast. I'm excited to introduce you to our guest. Before I do that, here's a quote just for this episode. We make a living by what we get, but we make a life by what we give. Winston Churchill. Our guest today has been a friend for a long time. They're a giving person, a teacher by heart, a friend to their clients, someone that goes above and beyond to build the right culture with their customers. Yeah, they happen to be a producing sales manager at Fulton Bank, the Maverick, the Nomad in the greater Philadelphia area when we met all those years back, creating market share from nothing into something. That's my opinion. The one and only Jeff Vilk. Thanks for coming on the Culture Matters podcast, my friend.
Great to be here. Looking forward to it. Long time overdue.
And did you think that you were going to be in the service business when you went to school for business and marketing? Like, or do you even consider yourself in the service business? When I mean service, like the way that you go about your work with your customers.
So when I was in college, I was running a karate school. So I guess I kind of thought I was always going to be working with people, helping, teaching. Um, I didn't think it would parlay into something like this. And, I learned more and more every day. I always like to say, like, I've seen it all. I haven't, but I've learned this is definitely a service business above all else. So I don't know if I learned it in college, but I know right now the successful loan officers in this position are the ones that provide the most value. And value either comes from you got to be highly educated in the field, or you got to be able to provide an acceptable to your clients. So
How did you become educated in the beginning of your career?
honestly, it was just more of seeing who was successful. So out of college, I had a good mentor at the first company I worked for. Commonwealth United Mortgage was part of National City. He was also a Drexel alumnus, which is the only reason he gave me a shot in the first place. Because coming into this industry, that experience is virtually impossible. Because anybody that hires you, they want to know that you have a track record or a history of doing loans, etc. Outside of working for a call center,
Hmm.
um, there was great people on the team, and I was able to see how they were successful and just learn by observation and studied a lot. Study guidelines, study what we can and can't do. So
When did you study them?
So when I came on, when I was learning what people were telling me what they do from day to day, you're always in the guidelines because every scenario is like a fingerprint. So as you're
Hmm.
trying to help somebody, you want to see everything that you have at your disposal. By reading guidelines, you can properly guide them through what they're able to do. I've also learned over my career that you need to know guidelines better than underwriters because they also have an interpretation of what's written in black and white. The better you can read guidelines, the better off you are to your customers. So
What do you say to those they're in the business that don't know what guidelines are or act like they don't?
I mean, as a producing sales manager, I do help my team from time to time. And I actually learned recently we had a consultant that was coming in talking to us about how to coach better. I was always of the school of if my team brought me a problem, I solve the problem, I keep it moving. And then I learned that they're like, it might be better as hard as it is against your nature. Just show them where to go, let them solve the problem. Don't always be quick. Just because you know the guideline doesn't mean you always have to regurgitate it. Um, So that was something I've recently started adapting to because the questions don't stop. Every day new questions come. I just started taking on the approach of where do you go to find it? And that includes loan officers, which I take as a compliment from different companies that call me with questions. Loan
Wow.
officers I worked with in the past that were on my team still call me with questions because the guideline should be the same regardless of where you work. So I think I must have left a good enough impression of the value of knowing and understanding the guidelines that they still call with questions, bounce ideas, even though they've
Wow, I'm
now
thinking
moved on to different teams.
I'm thinking like Mr. Miyagi at this point.
That's what I'm thinking too. So.
Well, then there's something important there I want to unearth though for our audience. Yeah, there rule number 7 in Beyond Order, this book I've been studying, is work as hard as you possibly can on at least one thing and see what happens. And it's like putting, so my question is, how important in your career has it been to put the reps in and have that practice? Because I'm thinking about that Bruce Lee quote, it's better to kick one thing 1,000 times than, or one kick 1,000 times than 1,000 different kicks.
Mhm. Actually, I know that quote. I used to use that example when I was teaching martial arts, because a lot of people don't know. I'll segue into your answer, but the concept is Bruce Lee was graded on, like he was promoting real fighting, etc. The thing that I never thought was fair is he had the background and he did those traditional practice things, like he was practicing kata, etc., which he thought was he was trying to get away from when he came to America. But the problem was he was as good as he was because of what he did leading up to that moment. So to get somebody to come in without the reps, it becomes, like it's not a fair grade. So in terms of like my career, I noticed that the more I studied, the better I got, the more approvals I received. And that's really where my reputation, I think, today is based on. And it's ironic because people use the term like, oh, he specializes in CRA, like Community Reinvestment Act, like, first-time home buyer loans. The guidelines aren't really different. So when you talk to a loan officer that doesn't understand it, they just don't understand guidelines. It's not that they don't understand how to help a first-time home buyer. There's just so many more moving parts you need to be familiar with. And that, like I said in the beginning, is like a fingerprint. But the more fingerprints you see, the better and faster you can become at qualifying somebody, knowing how to help them. And I see lifetime people that don't put people in products they shouldn't be in, grants that they could have been eligible for. There was one that resonated with me that I will never forget. I had a veteran that she was a disabled veteran. I was coming in to rescue the deal because the previous loan officer put her in an FHA product, had her put money down. And if, for anybody that's listening that understands what a VA loan is, and we also didn't have enough time to redo the loan as VA because the seller's like, oh, we got to close or I got to move on because they had a tandem settlement. So I had to help get the loan closed as FHA. I mean, it was painful. They could have gotten no down payment. I would have put it through PHFA, which is a bond program, got her a grant, and I couldn't help her with any of it. I just had to get the loan closed for her. I mean, I'll never forget that a loan officer put that person in that harm's way. So it was that one resonates with me even to today.
Wow. And from a time standpoint, is it 10 minutes a day extra, 30 minutes? And the reason I ask that is like I'm thinking for myself, like before I go to bed, I have a choice. I can scroll on this Facebook stuff, or I can read a book. And I have made the wrong choice. In like I've done that. I've made the wrong. This is my opinion, of course, right? And our
Mhm.
audience should know which is the right choice. I'm not gonna say, but
You know,
yeah. So like to become a master in that, and I'm giving you that. That's my view of it. Is it how many minutes a day would you say? Because there's a lot of other responsibilities that you have with your job.
so I can't say I dedicate a specific amount of time. I always dedicate what I call F around time. F around time is stuff that I was like, I need to put time aside to you because you basically you don't know what you're looking for if you're just randomly reading guidelines. So what I do is I just navigate through and I just like Fannie Mae and Freddie Mac do a pretty good job where you can bounce around and answer certain ideas. But what I really like to do is if I'm looking up something specific and I find it, then I start looking around what else I can find regarding it. But
Hmm.
what I teach my it's not like I always go back to guidelines. Not there's not a lot that I'll always just regurgitate off the top of my head. But what I do well, I know how to find it quickly. And that's really the value. How fast can you find the answer? And that leads back to your customer service point. If you're trying to service somebody, you can't get back to them in days. I mean, this market moves quickly now. So if you say like, I don't know the answer, and then you got to take an extraordinarily long amount of time to find it, or reach out to an underwriting mailbox that might not respond for 24 to 48 hours, nobody's going to be sitting by waiting. So I've just learned how to effectively find the answers quickly. And that's what
Mm.
I've been telling to my team after we did the coaching. Here's how you find the answer. Here's how to like navigate the question to find the answer system. So
Have you found that people procrastinate?
I found that so I've learned that people don't necessarily take the initiative to master their craft. So like taking an application is not ultimately complicated. Technology has gotten to the point where a person can literally fill out the whole application. Our value is what we do with that information once it's provided. And I don't know if it's procrastination, but some people don't have the drive to just want to learn. Because when they say like there's no such thing as a stupid question, which I get, but when you're getting the same question over and over again, I think a different problem is coming to light. Um, and which is why like I've actually loved this little tweak in my day-to-day process. The questions come in, I know the answer, and I'll say, here's where you're going to go to find it. And then call me back if you have any questions on it. Because if you're calling me, and there's a difference, there's two types of questions. One is just an overall question, like what can we do here? Versus here's what I'm reading. How do you interpret this? Two different questions. You did the research or you didn't. And
Mm.
again, I was part of the blame because in the beginning, I would always just give the answer. Somebody calls me, and I'm like, all right, here's the answer. Move on to the next one. So
Well, what would you say is some of the biggest obstacles in that gestation period, the beginning of someone's career as a loan advisor? The biggest obstacles that come before them,
so the if you're going to be
whether
dabbling in difficult
whether it's
it's
self-imposed or generally like industry, anecdotally in your experience, what you've seen, some of the biggest obstacles, self-imposed or otherwise, that can impede on people's careers.
not educating yourself in the field. The problem is like every loan is going to be a fingerprint. Every single loan is a fingerprint. No, like rarely you're going to see two scenarios exactly the same. And if you remember the like show Highlander, the movie, the
Yeah.
more scenarios you do, the more repetitions, like you said, the better you're going to be. That comes one of two ways. Organically, you either put yourself in harm's way and you keep trying to figure out problems that keep coming up, or proactively, you see what other people did and you start learning from their experiences. So, like, I got the benefit of as being a producing sales manager, especially managing primarily loan officers who work with first-time homebuyers. I got to see not only my situations, but I got to see everybody's problems. So I got the benefit of learning from everybody's scenarios as if they were happening to myself.
Hmm.
Um, the loan officers to get into the game, there's a lot of resources that are out there that just people don't take advantage of necessarily, and to their own detriment. Because the problem is once you get burned, then you learn you're not going to make the same mistake again. But there's about getting burned and putting a bar in harm's way as well. And that was something when I realized that that's the biggest missing link. Because every loan officer, aside from if you're getting licensed, same thing with real estate. Like they don't tell you actually how to do the day to day. They just want to make sure you don't, break the rules, break the guidelines. But I think right now, like you notice the shirt.
Yeah.
I was lucky enough to have a sales director that said, like, Jeff, you might want to look into the CMB. He was a master CMB. CMB is a certified mortgage banker. And it took me to a level I thought I was already at the top of my game, and it introduced me to an entirely new world of mortgage banking. And when you see the bigger picture, I think it makes it more effective, like learning guidelines better, regulations better. I mean, it just showed me how secondary work, how rates work. Because before, again, if you can be, short-sighted, I know how to do an application, I run the loan through the system, and that's all I do. I think the CMB process just opened up an entirely new world, a new way to think, a new way to learn. I mean, that was a fantastic journey. It brought
How
a
do you
lot of value.
distinguish between salesperson and advisor, if at all?
I think when you talk to any other top performer, I think they all have similar things in common. I don't think I've ever spoken to a top performer that wasn't a master of guidelines, of processes. You rarely ever see somebody that's a top producer in the top 1-2% ask them questions about products where they're just like, I don't know. Like that's like to be an advisor, you have to take it upon yourself to learn what does that mean. So I know Dave Savage, the guy that started Mortgage Coach. He'd always
Yeah,
talk about
we
being
we
an advisor.
we I'd love to have him on the show. He's wonderful.
Yeah, so him and I talked, because again, I'm not $100 million guy like the people he interviews. What he liked was I was using it to help educate first-time home buyers. So using his technology helped, but he was trying to figure out why hasn't it been adopted by more loan officers that help that segment. And again, it's like people kind of get in their own way. If it's a new technology, they're used to doing it an old way, like people don't want to necessarily adapt. As controversial it may be, our industry is also becoming on the higher age scale with not enough new blood coming in. So while everybody's talking about technology advancing and creating a better customer experience, you still have loan officers that don't utilize any of it. And that's an industry thing. It's not just, an individual. Like if people are stuck in their ways, they don't want to use a technology like Mortgage Coach, then you're not able to bring as much value. Mortgage Coach takes an average loan officer and makes you extraordinary, because it literally does calculations for you. We can show somebody in terms of the word advisor why one product will be better than the other. It's not just the interest rate. It's how much interest you paid overall, how much mortgage insurance. It does all these calculations, tax advantages. Then you can give a borrower the ability to make a decision best for themselves. So, and you can't do that by sending somebody a cost sheet with, I don't know, 100 different numbers on there that they've never seen before, and have them make an educated decision is virtually impossible. And I think that's the disconnect at the moment in terms of educating and empowering a borrower.
What are some general concerns or conflicts in the first time home buyer mind?
That one more time is
Like
conf.
concerns, misnomers, fears,
Here's, I mean,
questions,
the
like the frequently asked questions.
one down payment. I mean, it's always the same, and it's the same. Yeah, I guess you can listen to first time home buyers, but it's your credit. What does it take to qualify? They've never been through this process before. How much money do you have to have saved? But I put first time home buyers in two categories. One is the person that has enough money to buy the house, do the 20% down traditional format, conventional financing, etc. What I do primarily is I'll work with the borrower that doesn't have enough to complete the transaction. So if you need 20 grand to buy the home, they have 4,000 in the bank, I got to figure out how to get that rest of that money, bridge the gap. If they have other income that loan officers might not know is eligible, if they have child support they didn't know to ask, if they collect Social Security on behalf of somebody else, they have multiple jobs, like there's things you need to know how to utilize to make sure that you give them the best opportunity to qualify. And that's the danger, like I used with that VA scenario. If the loan officer is your primary contact and you don't shop around, I think that's dangerous. Because one, it's interesting because you can go to 3 different loan officers, get 3 different outcomes. I used to say the same thing about appraisals. You get 3 different appraisals, you're going to get 3 different values. I think first-time homebuyers, especially ones that are concerned about their credit scenario, it's like if they go to one person and that person says yes, they're afraid to go anywhere else. And that's a shame, because then you got that high net worth borrower who will shop you to the penny with multiple lenders throwing money at them. So I think that's the biggest disconnect. Or they get denied and they don't go somewhere else to see maybe somebody else can help them.
Let me make sure I follow this.
Hmm?
So those that maybe have the most apparent options, they'll get the most bids, but those and they quote unquote need it the least, but those that need it the most will end up getting the least amount of bids or the least amount of checking the least amount of sources. They might
Right.
be the one that needed it the most, and they could
Yeah.
lose the
I'll give it,
opportunity if they don't get it.
so I'll give you a prime example, right? In the beginning of my career, like if a realtor, if a borrower says to the realtor, can you introduce me to somebody? I'm usually on the list to get introduced. What I started noticing was if they came pre-approved by anybody, it didn't matter. The realtor doesn't say a word. And then when I started realizing, I'm like, just out of curiosity, like, why not introduce them to me anyway? Well, they came pre-approved and etc. But the problem is like, but what if I offered more? What if I gave them a higher down payment, like a grant? What if I gave them better financing options? That person, again, first time they're buying a home, they don't know to go around. The realtor should be the one saying, hey, listen, I know you're pre-approved, It's not going to harm you to check to see if maybe somebody can do something better. How often are you buying a home, right? And that kind of changed the whole process because then now realtors are saying, listen, you might want to talk to this person. And again, the only reason they chose the financing option was they might have banked at that place, for example. Or my uncle or cousin used this person, you should this person. Those aren't referrals, if that makes sense. So that's one of my takeaways that like how to help a first time home buyer. I know the mindset, majority of them don't want to shop around. They don't want to hear no multiple times, or they don't want to necessarily go over their situation because it's not the best. But that's why I've been as proactive as I am, trying to make sure that we get the information out there. Working with housing agencies, counseling agencies, knowing all the grants that are available. That's a separate job in itself, knowing what grants are available and how to stack them. Because some loan officers, they hear the word grant, they don't want to have anything to do with it. They'll just refer you to somebody else. So something to consider. These are a lot of factors, as you can see. It's like all the work that goes into that borrower causes loan officers sometimes to be concerned and say, I'm not really going to dabble in that space. For the same reason, I'll give you a side comparison. If you do a construction loan, I understand the concept of doing a construction. I just choose not to because I focus on first-time home buyers. Because construction, it's a mortgage like anything else, but now you're dealing with a builder, specs, a plan. What happens if it gets off the plan? If it's a winter snowy season, some loan officers just don't focus on that. So I chose to focus on first-time home buyers. And I felt like that was a space that was heavily neglected in terms of quality loan officers. Because I'll give you one other component. When you talk to people that are hired just to do CRA loans, like first-time home buyers, they might be good at doing workshops. They might be good at doing community events. But the skill set to approve the borrower, to use the guidelines that are allowed, they might not be the strongest. I always use the phrase with we have a CRA manager. I always say like the loan officer that should be hired to do first-time home buyers needs to be the best that there is. Because those are scenarios where literally you approve somebody for 200,000 at 205, deal might be dead. As opposed to a first regular borrower, there's loan officers that don't even need to do anything to give a pre-approval. Like this person can buy the house with cash if they want. So that's the dangerous thing about what we do. Like you have to be as sharp as possible.
Well, how have you seen home ownership impact people's actual lives?
I mean, it's been great. The scenarios when the things that keep you motivated when you see a person that had let me use the right language, a bad landlord. I know there's words for that, like a bad landlord, house being sold and kicked out. I mean, I've seen scenarios and like they had no other choice. They have to buy a house. They don't want to because they've been kicked, like moved from place to place. And then seeing that, and then seeing somebody that needed to move into a certain area to get a better school district for their kids, better commute to work, starting to develop equity. Because if you ever think about it, like we just had a personal scenario, we buy a couch, right? At the same time, because our couch was falling apart, we bought a couch, me and my wife, and immediately the next day our water heater goes, right? So it's like this chain of events. It's like you're thinking, how much am I going to spend this month, etc. The water heater goes. And I can't express to you how many calls I've gotten where a person buys a home, they never had savings, so now they have equity in a home. I've seen people that had to sell homes, but like in terms of developing wealth or having access to assets, like if you ever see somebody get a home equity loan, it's changed people's lives because now they have something they can pull from, fund their kids' education. You know what I mean? Because otherwise, if you don't own a home and you're just renting and you don't never save any money, what's the backup? And you've been renting for years. I've seen people that have been renting from the same place for 10 years. But if you look at the savings account, nothing. I've seen people that the situation happened, they had to move. They were able to sell their home, relocate, and now have assets, now have proceeds. I mean, that's like what I call a forced savings account. And the security of like, there's no landlord coming and telling you got to get out, we're selling the house. Can you imagine uprooting your kids and your family at the whim of a landlord? Or the rent goes up and up and up and up. And you might have already been in a financial stress and find out, and this is the thing that social media does a very good job of. You buy a house and now you have security in the payment. There's no landlord coming, hey, by the way, like it's going up again, another 10%, 15%. So it's been, I mean, that's my favorite part of this job is those stories.
What do a lot of our listeners are they're being told different information on these social platforms like don't
Oh
buy,
yeah.
rent. what do you say to that person? To how do you combat that narrative as a as someone that's dedicated their life to helping people in the first time home buyer? I think it
It's
should be addressed, right? That narrative should be addressed, I think.
I don't think there's anything in life that can be a one size fits all um, tip or advice. Everybody's different. If you bounce around a lot, you're not going to want to pay the acquisition costs and the sale costs. Like if I buy a house and I know I'm moving in a year, or my company moved me around, et cetera, or I want to live here for like a year or two, because you do have to pay a cost to buy and sell, right? There's a cost to that. So then you got to figure out, is it worth yes or no? So to just go on and say it's not worth buying, I mean, then you've never seen that person that's selling their house and has so much proceeds, or like downgrading later in life. If I buy a house when I'm 25, that if I just happen to live in my home, I know that doesn't happen anymore. But if you live in your home till you're 60, now you can get a reverse mortgage. You can sell the house for proceeds if you want to kind of supplement your retirement, etc. But you're going to tell me that if you've rented your entire life and you do that math, you're going to say that that was better than owning a home? No. I've seen people that have bought a home, now they're renting it out, now they're getting income, now they're paying down that asset, they're going to have more equity while they buy a new home. You're going to show me a comparison where rent's going to be better? No. If you have the ability to buy and you're not planning on moving every single year, I can't imagine. It
Mm.
provides stability. I mean, it's a cornerstone of our ecosystem. COVID, what was the first thing that happened during COVID? The government stepped in and go, we're buying all the loans. They would never allow you to not be able to either refinance, put yourself in a better position, or be able to buy a home. They were like, we're buying everything for a reason. That keeps our economy going. And the only thing that happens when borrowers don't buy a home, investors buy a home. And then you get right back to that initial, now you have a landlord, you're paying down their debt, you're funding their retirement, and that payment goes up every single year. I can't
Mm.
imagine there's any listener out here that ever got a phone call from their landlord. It's time to renew your lease, and here's what I'm going to do for you. I'm going to lower your monthly rent. I don't think that's ever happened in history.
Mm. I'm gonna lower it.
It just doesn't happen.
That's good. How about
And statistically, by the way, rent has gone up to the highest level it's ever been, statistically at the moment.
really?
So rent is not a cheaper alternative. Rent's gone up across the board. So I mean, I think it's at its highest level now than it's ever been. Like I think in the
Mm.
last couple of years, it's gone up astronomically. Like I don't think I've seen a scenario, and again, I do with a lot of first-time homebuyers where the house they're purchasing is a higher cost than the mortgage they're going to receive, which is interesting.
Really?
So it's an interesting fact because when you see it live each time, that's when you know you're putting somebody in a better position. If you have a first-time homebuyer that's money is important, monthly expenses is important. You don't want to tell them like I've been paying $1,000 rent, they're buying a house, now their mortgage is 2,000. It almost never works out that way. It's interesting; they always correlate, and they're always around the same. So I see a lot of memes. You were talking about social media where they post like,
Yes.
well, the bank says I can't afford a $2,000 payment, so I'm going to keep paying 3,000 for my rent. It usually doesn't work that way. You know, the math usually works out.
Well, I think
That's one.
common sense wise would be like there's more people in the rental. There's the investor and the home renter, whereas and the bank or whoever's lending the money. And in
Mhm.
the scenario where I own the house, it's just me and the bank versus me, my landlord, and the
Mhm.
bank.
Correct.
There's three people
Yeah.
versus two people. I just um, what about the can't right now in this current market, state of the world, are people buying? Like, is there
Yeah.
activity? Because that's one of the things, and people might not be, you
So
know,
you hear people say that people are on the sidelines because they want to wait for rates to go down. The
yeah,
whole story is inventory is low, created by people that are sitting in their homes with low, like historically low interest rates in the 2 to 3% range. Inventory is low. With inventory is low, you don't have as many transactions. Now, luckily, I'm in Philadelphia. Philadelphia seems to have no shortage of transactions. Um, but I mean, the market, like anybody that's looking to buy, and I know a lot of people that are trying, there's just not as much inventory. But like, you see a lot of people say this, and the one takeaway I'll say is it's never worth waiting on the sideline. Ever. It's just never worth it. If you have the ability to buy a home and a home becomes available, just get it. Figure out the later, just get it. Because the people that were like, okay, if you think about the common sense of nature, if people are waiting on the sideline for rates to come down and rates go down, you just created more competition for the same housing. If you're able to afford it while everybody's on the sideline, buy it. Because if you're waiting for the rate to go down, as long as you know you're always eligible to refinance that loan to the lower rate, take advantage. And that's, again, the problem with social media is you got people nonstop talking about like, oh, is the market going to crash or rates going to go down, etc. Like, if you find the house and it's the right house and you want to put your family in there and send your kids to a good school, whatever the reason, take it, run with it. Because if COVID showed us anything, when rates went 2-3%, every open house had 30 to 40 cars just lined up down the block. That's what low interest rates taught us. Take advantage. Hope the rates go up a little bit. Get more people out of the qualifier. You get less competition, and just pray you get the offer accepted.
Hmm.
So
How have you built strong relations with your realtor partners and other affiliated advisors? What advice do you have to our listeners?
how I built it, we've been through the fire together. So I feel like there's two types of realtors in this regard. There's ones that look to work with you, and the ones that are just transactional. The ones that have been through the fire, meaning like the job that we've chosen, you're going to work with a first-time home buyer that needs help, etc. Things are going to go wrong. We get them back on track, but things will not go, smooth 100% of the time. And there's realtors that don't understand it. That again, it's transactional. So there's a hiccup, they never work with you again. And then there's ones that appreciate the effort and the fight that you put in to get it to the finish line. And that's, I feel like, how you get that loyalty where we're working as a team together. So like, and I will say this, I'm going to steal the quote. This was actually my favorite. I think it was Deborah Bird that said this. So she does a lot of social media for loan officers, etc. But she posted this thing, and when the market was changing, loan officers were saying like, how do I bring value? You're saying like, what would a listener want? Like, how do you develop relationships with the realtor? And like, if you don't have value to bring, if that's the question you're asking, you don't have value, then you might not just be that good. So the realtor might not be looking to you for help. So I can do, for example, doctor loans. I can do jumbo loans. I can do these A+ deals. There's no skill to it for the most part. They're usually like, I almost call it like autopilot. Somebody applies, they're good. The value you're going to get is if I can take that person that might not be ready to buy today because of either the program or cash to close, and I solve that problem. Now I help the realtor do another unit. I help get a person in a home that might otherwise not been able to. That's how you get the reputation. Like, call Jeff, not because I can solve every problem. Call Jeff because you probably have the best chance of getting the problem solved with him.
Hmm.
And that's where you want a realtor to look to you as an advisor, not just to the borrower, but the realtor should look to you as an advisor. I have realtors that call me because an offer was made, and they just want to run it by me. Like, listen, like, what do you think about this? Like the down payment or like turnaround time on certain programs. Like, they still call me even though I have nothing to do with the deal. And that's where I feel like I brought this person value enough to call me when I'm not even part of the transaction. And a lot of realtors have those. They're luxury. They have those top performing loan officers that are there to support you, to make sure even if they're not involved, that you're not putting yourself in harm's way by either working with somebody that might not get the deal done or terms that don't make sense. So I hope that
What what
answered it.
what are you most excited about in 25?
I mean, every year the excitement is trying to, be my personal best, be better every time. I've been, like you were saying, I took a page out of your book. I started reading more. I didn't realize I was a reader. The more I'm reading, the more I'm enjoying it. I'm reading The Next Generation Loan Officer, and it was interesting because it kind of put in perspective things that I think everybody knows, but kind of quantifies it. Like an example of like, we're all on social media, like you were talking about, you're scrolling through. But one thing I did a takeaway of like, you need to make 25 points in a day. And the way you get points is like 1 point is if you like somebody's content, 2 points if you comment, 3 points if you do a direct, like a DM, like a message engaged. You get 5 points if you send something to that person randomly of value to that person.
Wow.
But I never thought of it that way. I would scroll through stuff. Sometimes I like it, but they're like, every day you should do 25 points. You should always be posting content because like whether you think somebody's watching or not, it doesn't matter. Just keep going, keep going. And I started doing it. And I'm already seeing responses because I'm seeing referrals coming from people I haven't done business with in years. and just coming out of the woodworks. So I'm excited to see how far, if I could literally focus on social media and realizing that is the media that we use now, to make sure that I'm part of it, that I don't miss the boat. Because again, before I was just focusing on the business itself, it's just part of the game that we have to keep going. Even if you're busy and successful, you have to be putting content out there. If anything else, you need to be putting content out there to counteract nonsense like you shouldn't buy a home, you should rent. That's a responsibility for us loan officers to make sure that we're putting out content to counteract it, to educate, to provide value to people. So while they're scrolling, they might learn something and get themselves out of harm's way.
Amen to that. And I'll tell the listeners, I'm the first like to own a home in my family, basically my two moms. And I'm proud of that.
Yeah.
And that
I
the
mean,
listeners
yeah,
should buy a house if to build the culture of their family and their legacy.
yeah. When my wife and I got together, we were renting a condo in the city. It got sold, right? We had to move. Moved into another unit in the same, those three buildings. We moved into another building. That got sold. That was the second time in 2 years.
Wow.
And that was the final thing. Like we weren't planning on staying long term, but we weren't ready to leave the city yet. So the third one we bought because it's like you can only go through that so many times, and again, that's what I was talking about. Like buying a home gives you stability. And then, by the way, when we sold the home, we made a profit on it, which helped us
Wow.
buy our house as well. I mean, like it was, and if you do the math, when you pay considering the mortgage, etc., with the equity we built and the profit we made, it's almost like we lived there for free for that time period. I mean, these are the things that I hope people pay attention to when instead of just listening to social media scroll and say, "Don't buy, rent." I think Grant Cardone said that. Like, I don't rent, I don't buy anything. I'm like, trust me, he owns enough. You know what I mean? I understand the concept, but it doesn't apply to the average American.
Well, and the irony of that is people might not know that he actually did recently buy a house,
Yeah,
cash. So he did buy a house, which is,
yeah.
if we are going to use that example, he did actually buy a
Mhm.
single family on the West Coast from some Russian oligarch or something, which is just a funny anecdotal segment there. But Jeff, thank you for being who you are to your customers and sharing your wisdom with our audience. I would like to know the fastest way that our listeners can connect with you. Maybe they want to continue following you or even get in contact with you fast to build a relationship. What would that be?
I mean, usually phone call or email. Phone call like 267-736-7962. That's probably the best way. I'm learning because like text messages and phone calls, that's usually what people like now. And text
You're the
messages
man.
have become the primary medium. People don't like getting
Text
on phone call.
text Jeff. He will definitely talk to you and help you if he can. He's been a longtime supporter of the Culture Matters, long before we even had the podcast. Thanks for coming on. Finally, look forward to next time. If you're listening to this, connect with Jeff. Please leave us a review on the Culture Matters podcast and share this with a friend that you have that you think is should own a home or is looking and is, probably this information would help them. And we will see you next time on the Culture Matters podcast.